Hi, everyone. I was just going to go through some brief examples to cover the week four information. So let me share my screen real quick. Okay, so first what I want to go over is the accounts receivable information. So basically what we're doing here, we're just going to go over an example of percentage of receivables and then also about aging. So regarding our receivables. So let's look at the first example. Bob has an ending balance in accounts receivable of 100,000 and an unadjusted credit balance and allowance for doubtful accounts of 2,000. So that's right here. This unadjusted balance, we have that as a credit and allowance for doubtful accounts. It estimates 3% of its accounts receivable will eventually be uncollectible. How would this be recorded by the company? So 3% of 100,000 is 3,000. That should be the balance in the allowance for doubtful accounts. That's what we want to have as the balance. So if you look right here, that's our ending balance that we want. It's easy enough to figure out. We're going to just take the 3,000 ending balance we want minus the 2,000 we have right now. And that means we require a $1,000 adjustment. So we're going to debit bad debts expense, and we're going to credit allowance for doubtful accounts for the $1,000. Next one is an example of the aging schedule. So this schedule classifies customer balances by the length of time they've been unpaid. So after the company arranges the accounts by age, it determines the expected uncollectible accounts by applying percentages, and they're going to base that on past experience to the totals of each category. Generally, the longer receivable is past due, the less likely it is to be collected. So if you look, I created an aging schedule. And for customer A, we have $1,000 total. $400 of that is not due. 200 of that is between 1 and 30 days past due. 200 of that is between 31 and 60 days past due. And 200 is over 90 days. So if you added this, the 400 plus 200 plus 400 plus 200 plus 200 plus 200, it would equal that 1,000. Customer B has a total of 1,200. They have 1,000 not yet due, and they have 200 due over 90 days. Customer C has a total of 500 due. 300 of that is due or I should say overdue, number of days past due, by 1 to 30 days. They have 200 of that is 61 to 90 days past due. And then all of the customers combined, we have $10,000. 4,000 of that is not yet due. 2,000 is 1 to 30 days past due. 3,000 is 31 to 60 days past due. 561 to 90 days past due, and 500 is over 90 days. So we have to have an estimated percentage of the uncollectibles. So this is the percentage we believe will not be collectible. So for the not yet due, we think that's 2%. So if you multiplied 5,400 times 2%, you'd get 108. For the 1 to 30 day category, we believe about 5% of that is estimated as uncollectible. So 2,500 times 5% is 125. In the 31 to 60 day category of past due, we have 3,200. We believe 10% of that will be uncollectible. So 3,200 times 10% is 320. In the 61 to 90 days, we have 700 past due. 30% of that is believed to be uncollectible. 30% times 700 is 210. And then in the over 90 days, we have 900. And estimated percentage uncollectible will be 50%. 50% times 900 is $450. So the amount of total, or I'm going to just go right down here. You could just read that. If the unadjusted trial balance shows allowance for doubtful accounts with a credit balance of 400, what's the adjusting entry going to be? So right now, in allowance for doubtful accounts, we have 400. We need it to be this total of $1,213. If you added the 108, 125, 320, 210, and 450 together, it'll give you 1,213. So we need it to be 1,213. Right now it's 400. The way we figure that out is we take 1,213 minus 400, and that gives us $813. So we will debit bad debt expense. We will credit allowance for doubtful accounts for the 813. So that's our adjustment right here, that 813 and allowance for doubtful accounts. And if we looked at bad debt expense, we're going to have an adjustment, of course, a debit adjustment of 813. And just another example, in this case, we're looking at allowance for doubtful accounts having a debit balance of 200. So that's a little bit different. So if you looked at that in allowance for doubtful accounts, that unadjusted balance right here is a debit balance of 200. So what we're going to have to do in that case, we're going to have to take this $1,213 plus 200. So our adjustment would be debiting bad debt expense, crediting allowance for doubtful accounts for 413. We show that adjustment in bad debt expense with a debit of 1,413. The adjustment, of course, in allowance for doubtful accounts is a credit of 413, and that would give us this balance that we want in allowance for doubtful accounts of $1,213. 1,413 minus 200 would be 1,213. Okay, so that takes care of the account receivable portion. I also wanted to do a brief example for a reconciliation. We already did a big long one in the problem, so this is going to be a brief one. So right now we say Bob is unable to reconcile the bank balance. Bob's reconciliation is as follows. So this is what he did for his reconciliation, and we're going to prepare a reconciliation in good form. So we start out with the cash balance per bank. And if we look up here, we see our cash balance per bank is 2,000. We then add deposits in transit, which are right here, 500. And if we add that together, we'll get 2,500. We're going to then subtract our outstanding checks. Those are shown right here, $400. So 2,500 minus 400 is 2,100. That's our adjusted cash balance per bank. Now that, of course, has to end up equalizing the adjusted cash balance per books. So for that, we start out for our adjusted cash balance per books. We're going to start out with our cash balance per books, which is noted right here, $2,610. We're going to have to end up subtracting from that our insufficient funds check, which is right up here, 500. And also the bank service charge, which is noted right here, $10. So these are items that the company didn't know about, right? They didn't know that there was a customer's check that basically bounced for 500 and that or didn't at least allow the deduction yet for that bank service charge of 10. So if we add that together, that's $510. $2,610 minus $510 is $2,100. So basically, these are balancing, right? And when you're looking at the information for the bank, it's basically things the bank wouldn't know. The bank doesn't know there's deposits in transit or that there's checks that Bob Company wrote that they haven't received yet. And again, looking at from the company standpoint, they didn't know about the insufficient funds check, and they didn't, of course, they realized there's a bank service charge, but they didn't record it yet. And if you want to just look at the journal entries that would be required by the reconciliation for the company, they'd have to put this insufficient funds check was an account receivable they thought was paid. Well, it wasn't. So they have to put it back on their books, right? So they're going to record that insufficient funds check for the 500, and they're going to credit cash because they would have recorded this debiting cash, crediting accounts receivable, thinking they had gotten the money. They don't or didn't. So now they're going to debit accounts receivable and credit the cash. And then they're going to also just record the miscellaneous expense transaction for the bank charge. So they're going to debit miscellaneous expense and credit cash for the $10. And that is it. So if you have any questions, most of the chapters we really did cover, or the important information was covered in the homework. And also I've got some study guides I added. So have a great week, everyone. If you have any questions, please feel free to call me. Bye, everybody.